everybody, this is Mike Hamilton on the morning of the 14th of October, so it's 10:30 UK time, and what you're looking at here is the latest UK job numbers. So we've got COVID, increasing unemployment post-COVID, a drop in unemployment as we come out of COVID and economy picks up. Here we've seen this steady little rise up here of UK unemployment. So if this continues, so we're above, that's the expectation down there, and that's what we actually got. So we've got 4.8% unemployment in the UK. If this continues, then this is going to spell trouble for the markets. And this is the latest fear factor. This is gold on a daily chart, and this is effectively a useless metal. It's just considered a safe haven and a reserve against inflation. That's all. Very little industrial use, primarily used for jewellery or storing. So when you see something like this just continually breaking new highs, you just got to be very, very careful in the markets. So ever since we had this breakout pattern in, I think it's late August, this is just, every little pullback has just got bought. So if we touch 4,000 again, we could be on our way to 5,000 as long as we touch it and push back up, close underneath 4,000, and then this could roll over. And so, reason to be cautious in these markets. I think it's worth noting what's going on in the rest of the world. This is the Japanese Nikkei. So again, huge drop off, but there's the 50-day average. So we've stayed above the 50-day average ever since May on this one. Dips into it, have got bought, pushed up, dip back in, dip back in, dip back in. So we can come all the way down to 44,800 and still be the right side of this 50-day average. Actually probably a little bit higher than that. So if we close underneath 44.5, then this is all going to retrace. That is going to be broken and we're going to retrace. So just looking at a couple of other markets. Let's look at the FTSE 100, and same story. We come up from the 50-day average, we reconnect, we come up, we reconnect, etc. So if the FTSE can come back to 92.50, 92.90 and hold, then we can go and find 9,800 and potentially 10,000. It's a severe short-term sell signal. We get mid to longer term signals if we start to fail at this 92.50, 93 number, and then we are going to retrace pretty quick. But all the time we're up here, just watch out for a pullback, and then that index is bond. So deeper pullbacks in the US market, and this is the Nasdaq, primarily because the valuations in the US have been absolutely sky high, and even after this drop they are still very significant. So if we look at that high and then go back to the most recent low back there in September 2, you will see that we've actually come underneath the 50%. So I think it's pretty reasonable to expect that to come down to that ratio at 23,850. If we can come down and hold that, then I think this could go back to the highs, and then we've got 25,800 up there and potentially 26,600. So we close underneath 50-day average. We are attempting to pop back up, but I'm looking for at least another retest of 24,000. Only 24.5 now, and I wouldn't be at all surprised to see that pull right back to 23.5. The US is effectively still shut down. There is no movement on that yet. The government offices are shut down, while the Congress and Senate try and agree a raising of the debt ceiling yet again. This is a fairly common occurrence, but what is also common is that the market is not too bothered about lockdowns normally, as long as they normally get resolved inside 10 days. Anything longer, this could do longer term damage, but if that is resolved by the end of this week and quickly into early part of next week, then I think this will recover and then we can push back up. But like I said, lockdowns are not major concerns of markets. What are concerns of markets are data and confidence and corporate performance. Alright, but we are still shaky and we are still potentially looking for some lower numbers on these markets. Another key indication is the dollar. So this dollar's had a double bottom, broken this resistance. This is now support, so 98.5 is support, and so we look at if we're going to see parity. So if we close above parity, then we are going to skyrocket. We are going to recover. Where are we going to recover to? Let's have a look. So this is the ratio, support resistance ratios on that range. We've already hit the first level of resistance, so if we pull back and hold 98.5, we are going to go just to at 10,100, and I won't be at all surprised if this marches on to see 10,500 and possibly 10,700 as we climb and retrace this drop. If this really gets ahead of steam, then we're looking at 11,400 and 11,900. What does that mean for the pound? So pounds had, sorry, just get the pen. Pounds had a lower high, and in this short series we are seeing lower lows. So it's breaking down basically, it's rolling over. So if that, again, if that gets going, we're going to see 12,750, 12.5, and potentially all the way back to 12,000, and a boomerang all the way back to 12,000. So if you want to participate in that, then various ways you can do it are futures, on hedging in dollar denominated gold, all these kinds of things you can do to combat this decline. And if I look at the ratios again, I'd expect to see 11,900, and that's with a big breakout here on April, early April, on Liberty Day. So 12,750 is the place, is the target. 13,400, or a retest of that 50-day average. 13,450 is the place to get short if you see that in the near future, and then if that breaks down, you should see those lower numbers. If I do that, so if we basically crash into that resistance, then we are going to potentially start to wave count all the way back down to those levels. Close above 13.5, and then we're potentially going to boomerang right back to these highs again. Alright, moving on. So this is oil. So again, a series of lower highs and lower lows. So where are we going in oil? I think any move back to 60 is going to see us retrace to 48.50, and if it really gets going, I think we could see 40.50. I would expect 48.50 to hold. If we come down to this extension and hold, I think this could bounce back up. So short term we are heading for 54.90. If we get a triple bottom holding, then expect that to wind its way up. But so at the moment, 60 is 60. You can see 60.12 is this resistance zone. So if we just pop above 60, markets tend to overshoot. So if we get a retracement above 60 and possibly as high as 62.50, then we can go and find 50 or 80, and if that breaks that down, then we're going to see 48.50. Alright, so the target entry is 61.62 with a stop above 63.70 and a target of 54.80 with the possibility of a breakdown to 48. So that's what I'm looking for. So I'm looking for, I'll just draw this, looking for any retracement. If we can see 62.50, we may not. We are at the bottom of this little RSI range. So if we push back into that resistance and sell over a few days, a couple of weeks, we should find ourselves back down there. If that holds, we're going to pop back. If that breaks, 48.50. Triple bottoms are powerful reversal signals. So if we come down there, close above on volume. Here's the volume indicator down here, not registering for some reason. If we come down and hold this on volume, then watch out. This could be a significant reversal, and that's seasonally. That's typically what would happen. Stocks. Polar, POLR, has had a good move into close to £6, pulling back. So if we come back to that breakup area, that must be about 420, 430, and hold, then I think we can pop back up. We are extreme RSI here, but we broke this resistance on that move up here, so we could end up consolidating for a while the 50-day average catches up. So we could come all the way down to £5 again from this 550, but this is a very bullish move. It's a very high dividend yield, so if this works out, we should see back end of this year £6.25, £7 if that works out. Recovery stock, I went into Tate & Lyle last week. I got about 370, I think it's 365, 370 I think. Here we are at 388 as I speak. Look at the volume pickup. Doesn't matter what market you're in, you need this kind of volume pickup. To sustain volume pickup, not just a little squirt higher. Now there you got a little squirt higher and it dropped off. We need to sustain these levels if this is going to recover. I'm looking to see if I can get to £5 on Tate & Lyle, but we've got a lot of resistance up here at 450. So what we might do is wind our way up to 450, wriggle around. If it's going to work out, the dips will get bought and then we'll go up to £5. If we have a significant sell signal and drop off in volume at 450, this ain't going to work. CRE is still conduit, is still having a really nice move off of this Elliott wave pattern. Very high impulsive wave. So any pullback to 325 I think is viable before we do full recovery to 377 and potentially 450 plus. Very high yield, dividend paying stock, worth dipping into if that pulls back. At the moment it doesn't look as if it's going to pull back, but you can see the RSI is high up there. Advanced Medical Solutions marching up. Looks like we can come and see 234. So this is, if you see 210, 215 in the near future, I think that will allow the 50-day average to catch up. and then we could ultimately go up to 265, 270 plus. Volumes that are healthy on this rise. That's Advanced Medical Solution. Sabre, I got back in, I got out at Sabre at that high, I got back in here slightly underwater by a couple of p in the pound, but otherwise we are still holding here. We've got to hold above 135 in the next couple of days for that to work. There is a divergence here. RSI can show you divergence just as MACD. So we made, in this trend, this move, we've made a new low, broken that low, but made a higher low in the RSI. So not only are we holding a key ratio, support ratio, we have got a divergence. But we must see that get above 135 in the next few days. EasyJet, I got stopped out on this little move down here to 445. There's a prospect of a takeover. This is what I was thinking about this week. EasyJet is a great cash cow, expanding fast into the holiday market. So this is I think this is a prime target for a takeover. But sadly, I'm not in it. I'm not in it. I got in it and sold it out up there, started getting back in it, I can't remember, around this level here, and then of course got stopped out on that move. But this lovely outer lower support ratio has held at 445, and here we are, we've touched £5 today. If this is so, if this holds and these levels hold, we're going to fill that gap at 580 and potentially more. So 580 is the gap. It's still time to get in. 475 with a stop underneath these recent lows would be a good way to participate in this. No way of telling if that is going to work. So use your normal risk management skills. If you haven't got any, don't trade. Alright, plenty of other stuff to look at, but I'll leave it there. I'll quickly flick through SSP group, pulling back into this very sweet move here on the 25th. That looks alright. Prudential has had a fantastic run and is pulling back to the 50-day average. Any dip on £10 I think is viable. IQE is trying to hold here, but no significant punch higher, so this could drift lower. There's a little penny stock that I'm stuck in, and I've not filled my boots on it, got quite a light load on that. Anyway, so overall markets are good. It's typical time of year to see pullbacks like this. We just need to come out of this middle part of, as we get into next week, we do need to see these markets pick up if we're to see any sort of response towards the year end. Now, typically, let me just draw your normal cycle. Typically you would see you come out of January, pull back into February, March, pull up into April and May, sell in May and go away, dip into June, dip back in August, dip back in October, and then move up into Christmas. Normally that is a typical 20-year average for the market, so we are potentially around here in an average cycle. But if we lose these support levels that I've been talking about, then this is going to retrace. Alright, so we are, at the moment, the markets are normal for this time of year. They are dipping, but the overall market appears to be strong. You just need to exercise risk management if you are buying these dips. Alright, thanks very much for listening, and stay tuned. If you're not in my Telegram group and would like to join, then message me direct. Thanks very much, bye for now.